Investing in a publicly traded company requires a thorough understanding of the company's financial health and performance. One way to evaluate a company is through fundamental analysis, which involves examining the company's financial statements and calculating financial ratios. In this presentation, we will perform fundamental analysis on company XYZ, a computer manufacturing and selling company, and discuss some of the key financial ratios that can help investors make informed decisions about investing in the company. To begin our analysis, we will first examine company XYZ's income statement. According to the income statement, the company's revenue is $500 million. The cost of goods sold is $350 million, the gross profit is $150 million, the operating expenses are $80 million, and the net income is $50 million. Next, we will take a look at company XYZ's balance sheet. The balance sheet shows that the company's total assets are $700 million, total liabilities are $400 million, and shareholders' equity is $300 million. Using the financial information from the income statement and balance sheet, we can calculate several key financial ratios. Here are a few examples. Profit margin tells us how much of each dollar of revenue is left over after expenses are paid. In the case of company XYZ, the profit margin is calculated as follows. This means that company XYZ earns a net profit of 10 cents for every dollar of revenue generated. Return on assets ROA tells us how much profit a company generates for each dollar of assets it owns. In the case of company XYZ, the ROA is calculated as follows. This means that for every dollar of assets owned, company XYZ earns a net profit of 7.14 cents. Debt-to-equity ratio tells us how much of a company's assets are financed by debt versus equity. In the case of company XYZ, the debt-to-equity ratio is calculated as follows. This means that for every dollar of shareholders' equity, company XYZ has $1.33 of debt. By analyzing financial statements and calculating financial ratios, we can gain insights into a company's financial health and performance. In the case of company XYZ, we saw that the company has a profit margin of 10%, an ROA of 7.14%, and a debt-to-equity ratio of 1.33. These ratios can help us make informed decisions about investing in the company. However, it's important to note that fundamental analysis should be used in conjunction with other analysis tools, and not relied upon solely to make investment decisions.